A powerful supply squeeze signal has just triggered on Bitcoin. This is the same signal that marked every major market bottom over the past decade. It occurred at the bottom of the 2015 bear market before an 8,000% rally, the 2018 bear market before a 1,700% rally, and the 2023 bear market bottom before a 350% rally. Yes, all of these were driven by strong demand for Bitcoin, but each of these were accompanied by a shortage of Bitcoin supply. In fact, just like the signal in 2023 that occurred following the FTX collapse, we've seen today's signal trigger right after the tariff sell-off. And if we copy-paste the price action between these two instances, they are actually quite similar. You see, Bitcoin is a mathematical program and is extremely influenced by the supply at any given point. And this could be the reason why Bitcoin has been outperforming most other financial assets during the recent panic from Donald Trump's tariffs. The signal that has triggered today is suggesting that Bitcoin miners have just gone through a period of forced selling, now increasing the odds of a Bitcoin shortage that could ultimately lead to higher prices. Bitcoin miners are incentivized on whether to mine new Bitcoin or not, mainly based on profitability. Now, profitability depends on two key factors: Bitcoin's market price and something called the hash rate. The hash rate is what can be considered as the amount of competition there is in the mining space. It is the total computing power that is used to mine Bitcoin at any given time. When the hash rate is rising, it means competition is rising as more miners are coming online to mine Bitcoin, likely because of higher Bitcoin prices. And when the hash rate drops, it means miners are shutting off their machines because it's no longer profitable for them to continue their operations at the current Bitcoin price. So the hash rate can help us get an idea of just how much Bitcoin mining is happening. Over the long run, the hash rate goes up, but temporary dips are moments where Bitcoin miners are forced to sell. Once the selling pressure is fully absorbed, it eventually leads to a supply shortage for Bitcoin and corresponds to incredible buying opportunities. An easy way to spot these is by adding a long-term and short-term moving average on the hash rate. This tells us what the long-term behavior of miners is versus what they have been doing more recently. Whenever the shorter-term moving average is below the longer-term one, it is telling us that miners have reduced their production and that a Bitcoin shortage is more likely. And once the shorter-term moving average moves above the longer-term moving average, it triggers a buy signal, indicating that all the selling pressure on Bitcoin has been absorbed and the period of miner stress has finally come to an end. This is when supply tends to actually dry up and demand starts outpacing the reduced supply, creating a supply squeeze. So while hash ribbons doesn't directly measure supply, it signals the end of forced selling by Bitcoin miners and the start of a supply-driven rally. Since 2014, we've seen a buy signal on the Bitcoin hash ribbons indicator triggered only 12 times. In all cases, Bitcoin moved up after this signal, providing an average return of 52% in the following 3 months. And in most cases, Bitcoin continued to move even higher after the 3-month mark. Such a move today would put Bitcoin at $120,000 by the end of June this year, and potentially even higher prices in the second half of 2025. Now, although all readings were successful in the near term, in 2 cases, the rallies were killed by fundamental forces. These 2 failed signals occurred in December 2019 and August 2021. In 2020, so 3 months after the December 2019 signal, the COVID pandemic caused a massive sell-off across risk assets. Bitcoin fell by 50% during this period. And in 2021, the Fed announced that they were going to raise interest rates to bring down inflation. This again caused a sell-off across risk assets and marked the top on Bitcoin before an 80% decline over the next year. So in both the failed signals, the 3-month rally following the signal actually came to an end because of an external catalyst, like the pandemic or the Fed. Many will argue that the trade war today is that kind of catalyst that could take Bitcoin down despite the supply squeeze dynamic. But the difference is that in the 2 failed signals, so here in 2020 and here in 2022, the fear and uncertainty came about 3 months after the hash ribbons buy signal. Today, we are seeing the exact opposite. The recent buy signal has occurred after a period of extreme market panic and historic levels of uncertainty, and that too at a time when global liquidity is rising. These are factors that we've highlighted in our recent crypto videos and have historically proven to be very constructive for Bitcoin. This is why we are leaning on the most recent signal being a successful one. The caveat, of course, is that things could always get worse if no meaningful tariff deals are reached and the US economy goes into a recession, or if trade tensions with China escalate, potentially leading to a sell-off in risk assets. And if that's the case, then we could hypothetically see Bitcoin rally for the next 3 months before reversing, similar to the two failed signals. That is why risk management is key in such a market environment. In the near term, Bitcoin has broken out above its downtrend line and also managed to hold above the 300-day moving average, which has defined this bull market so far. This is quite promising for Bitcoin and could mean the supply squeeze is playing out right now. However, price still needs to clear the $97,000 resistance zone before really getting into a bullish structure. And at that point, we would start expecting new all-time highs on Bitcoin, likely within the next 3 months. By the way, just in the last month, we've locked in some solid profits. SLOC had 14 winning trades totaling 140% return, while P-Kane had a 90% win rate with a 50% profit, despite all the crypto volatility. As traders, the ability to remain disciplined and only take positions at key levels with a well-defined risk-reward setup has helped our members remain profitable irrespective of the crypto environment and secure some incredible returns. If you want access to real-time market updates, educational content, and trade alerts from 3 professional traders, make sure to join our crypto trading membership using the link in the description below.